Hello ladies and gentlemen, and welcome back to another video. My name is Waqar Asim from WWA Trading, and in today's video I'm going to be giving you guys a breakdown on a 1 to 45 risk reward trade on GBP AUD. Apologies for the slight delay when it has come to filming a video. At the time of recording it is Ramadan, so to my Muslim brothers and sisters out there, Ramadan Kareem. When it comes to trading, I like to take a little bit of time away. I'm definitely still on the charts every single day, but my priority shifts naturally at this time of year. Nonetheless, this trade that I'm bringing to you guys today is a very nice case study. It is what we constitute a prime setup within our community and within our boot camps. Obviously, I can't cover everything as to why it is a prime setup. However, I hope that you take some value from this video when it comes to combining structure and starting to see trades that have high potential when you're going with trend, and how to do a multi time frame analysis to understand what is a highly probable zone and what is a highly probable setup that has longevity in it. And this trade certainly is that. It has not reached its completion, it has not reached its targets. There's still a lot more potential left in this trade. However, at the time of recording, 1 to 45, that's pretty good. Whilst I'm on the topic of Ramadan, I want to quickly speak on WWA Aid. Now, for those of you that don't know, we have a charity at WWA Trading that we call WWA Aid. This time last year, last Ramadan, we did do a nice appeal. Usually these appeals that we do are personal contributions that myself, Wally and Alex do as part of WWA, and occasionally we will open up to the public to take on donations. The last time we did it was 1 year ago in Ramadan, and this year we will look to do the same. Right now we have some exciting projects within the works, but I will be opening up a donation link because a lot of people do ask, especially because I mentioned in my last video, people message me, how can they get involved, especially at this time of year when it comes to Ramadan. I got a lot of messages, so we will be opening up something. I've been speaking to our team out in Bangladesh in the Rohingya refugee camps, and we've been speaking how we can organize something in terms of donation for food packs or things of that nature that can be helpful. So please do keep up to date on our Instagram page, WWA Aid, and all updates for that kind of stuff will be posted there. Another update whilst we are here before I get right into the video, something very exciting has been in the works, which is maybe why I haven't been so active on social media, on Instagram and on YouTube. And that is something new we are bringing to our community in the name of liquidity inducement theorem. It's exciting stuff, and I'm going to have to make a whole new video on it because there's a lot of things that I want to share and talk about. But briefly for today's video, in the industry there is several schools of thought. You have Elliott wave theory, you have market maker method, you have harmonics, you have price action traders, smart money concept traders, Waqar theory traders. You have all these isolated schools of thought, and obviously the way we trade is a combination of a few, but when it boils down to it, we are actually raw price action traders that utilize smart money concepts, that utilize Waqar theory to an extent, and usually we're just trading supply and demand and structure with internal lower time frame price action confluences that we use. However, liquidity inducement theorem is going to be a new school of thought, a new way of trading that this whole industry has never seen before. When it comes to myself, our goal has always been not to just be a little education course or a little Instagram thing. Anything that I put my mind to, I want to do it to the best of my ability, and the same comes with WWA Trading. I definitely want to shake the industry, not just be a part of it, but actually impact it and change the way people actually come into the industry. Right now we have a handful of full-time traders. We have coming up to 100 FTMO funded traders, and in the space of 1 year we have achieved a lot as a community, but we are still in the infancy of where we want to be. And we know that with this new launch, with this new project of liquidity inducement theorem, it is a whole new way of trading, and it is a holistic approach to trading intraday. What I mean by that is a lot of people can trade intraday, and in my last video on USD JPY, I showed you guys exactly how to trade that ping pong where you're buying and selling, and then when you reach a demand on swing trading. So intradays into a swing play, that's a full breakdown I did in my last video for you guys. That's what I constitute intraday trading. However, liquidity inducement theorem is slightly different because it's actually understanding on a deeper level what intraday truly is, and understanding each market intention, why each push and pullback happens, at exactly what reason and why. And we have created certain trade models and certain new confluences and concepts that will help people trade intraday at a much higher, much more intellectual level. Again, I'll leave that for another video, but that's something we've been launching, something we've been working on behind the scenes for a very, very long time, and that has finally come to fruition. So yeah, definitely exciting times ahead for WWA and everybody that is involved within our community. But as for today, we have a very nice breakdown. I'm going to share my screen and let's get right into the video of a breakdown of GBP AUD. Get right into the video. Over here, we can see that GBP AUD are on the daily time frame. It's very clear to see we are in a bearish market. We can see we have been trending down. We have identified a push. Something I want to emphasize first things first. When you come to a blank chart, because a lot of people, when they see videos, when they see breakdowns, when it's guided for them, they can figure things out. But when it comes to a blank chart, people doing it by themselves, a lot of people get overwhelmed or lost because they don't know where to begin. First thing I always say, start on a higher time frame, identify points of interest, identify your supply and demand zones, and then you're trading within that. So therefore, the first thing to do is identify a push, because that's therefore you're going to identify where is your supply and demand zone of that push. So over here, what I'm identifying is a push. Therefore, I see a bearish push right here from the high to the low. We have now identified this whole bearish leg or this whole bearish push. And therefore, I know that the supply zone of that push is over here at the highs and the demand zone of that push is over here at the lows. Now, what does this have in terms of structure? What is this telling me? Obviously, immediate structure is bearish, but we know that we have a demand zone over here that led to this high, that took out these previous higher highs, this higher low made a higher high. Therefore, we know this is an interesting demand zone. But when price came into that demand zone, we quickly put it out. That demand zone was taken out. Price came to the demand zone, took it out over here, and now has come lower. This now indicates to me that, as you can see, we have entered a zone of consolidation over here. We are trapped within some range. It is quite a large range. Remember, we are on the daily time frame, so I can identify an internal push within my consolidated range. But the reason that it is in consolidation is very evident that we had a strong bearish push. Sellers were in the market. We came to a demand zone. Sellers broke past that demand zone. That means it's telling me that sellers are now starting to take profit. Buyers failed in the demand zone, but now because prices come lower, buyers have now entered the market. New participants have entered. Sellers have become buyers in the way that they take profit. And therefore, we are having an exchange now where the bullish and bearish composite operator are starting to play their hands at chess to see who is in control. So right now, daily time frame is telling us that we are bearish, but we don't know who's in control just yet. So now I go on a lower time frame to see internally what's going on. Now I've just jumped down to the 4-hour time frame. Same thing I want to do as previously. I mark out my structural points. So first thing, before I even get onto current price action, I want to see that we have a bearish push and this low made. This is a video I made for you guys previously, and it's actually how to trade intraday and counter trend. Over here, we are in a bearish market. We had this bearish push, as I told you guys before, and then we made this low in the market. We took out our previous demand zone where this box was placed for, and then we have internal lower time frame price action. That internal lower time frame price action gives us the confirmation to trade counter trend, and therefore you are able to trade counter trend, but you have to know your targets. On my last video on USD JPY, that's exactly what I covered: trading counter trend, but trading with trend later on when it presents. Same thing that was going on here. Previous video, I'll actually delete this because it's no longer relevant for us today. But that was actually a very nice, interesting way to trade and look at intraday and counter trend. Regardless, I've identified a low in the market and then a lower high, and now I've identified my push. So therefore, I'm going to mark out my most relevant push that is telling me where to be focusing my attention on. So we have this push, and that is where sellers' intent came from, made a new low in the market relative to this area, and therefore, because I know I'm on the daily time frame, I'm bearish. On the 4-hour time frame, I'm equally bearish. Therefore, if I'm to trade impulse, retracement into a certain supply zone, I know that I can be challenging this low to go on to make a new lower low. So that's a very rudimentary way to look at the charts when you're first coming to it. First thing to look at is what is structure, what is trend, who is in control, where's my push, where is my target. So now that I know that I'm in a bearish market, I need to identify where are my supply zones to be looking for sells. Now, if I'm to focus within the sell zone that led to the new low, as we know previously over here, this was a zone of reversal. It was a price reversal zone because sellers made a new low in the market and then buyers shifted that trend to now give us that retracement. So we know that historically this is a price reversal zone. It's not a demand zone per se because it didn't make a high, but it is a price reversal zone. So I know that over here previously, buyers were in control because they led to a retracement. Therefore, if now sellers are to make a new lower low, we need new sellers in the market to overpower these newfound buyers. Therefore, we need to have lower time frame presenting and showing us when those sellers are coming in and putting in their intent. Because if we know where the seller's intention came from, where institutional intent came from, therefore we can derive a re-entry for us later on. So that's what we are identifying right now. Over here, we can see very clearly, nice bearish order flow. I've marked out some of them already for you guys. We can see previous demand zone, sell zone leads to a BOS. So we know that this is a strong sell zone. We can see that internal IFC mitigation, IFC mitigation, IFC mitigation, and those mitigations are paired with breaks of structure. That is showing me bearish intent, bearish confirmation, and therefore we're starting to look in a nice area for where should we be looking to sell for next. I'm marking that with intention to focus on over in this area. We have this bearish order flow over here, and then we have an IFC on the lower time frame, it's on the 30-minute or 15-minute time frame, where we had equal highs, therefore liquidity lining up. We have a low in the market over here that these sellers are responsible for. So once again, we've identified a push, like so. Within that push, that is the base, and as we are having that retracement, we have our decisional supply zones, and within that we have a FU candle. That FU candle led to my BOS, and then internal IFC mitigation, so therefore order flow internally once again. So we know that this is clearly a bearish zone. There's clearly bearish price action and bearish intent within there, and we know that somewhere within there I'm going to be looking to sell once again if price arrives here again. So now, when we come back to zooming out, that's what we need. We need an overview of seeing what's going on. Now, as price arrived into that zone, we formed this low and then a new low in the market. Price has now retraced all the way back to where? To that exact FU candle that I previously mentioned. Therefore, this FU candle that I previously mentioned has now become a supply zone, because this FU candle led to this low, led to this entire push, and we have internal order flow over here. So we know that this area is taken care of, whereas the FU candle is left unchallenged, it is left unmitigated. Therefore, we know that institutional orders are still in drawdown over here. Therefore, price needs to return to this point at some point. Therefore, that's somewhere I'm going to be monitoring. Now, as price arrived into my FU candle, I know that my next target is to make a new low. If this is where my reversal is going to happen from, if this is my ultimate lower high, I know my target is to make a new lower low. Based on my daily and based on my 4-hour, this being my previous structural point, I can anticipate a new low to be formed just from understanding structure. Therefore, when I saw price come into my supply zone and it taps right into my FU candle, gave me that mitigation, what did I see? I saw that sellers' intent, sellers' injection, sellers' money came into the market quite aggressively at that point. That confirms to me that was a valid supply zone. And that confirms to me that the internal price action, the complex pullback that was happening, this bullish structure that we're seeing of higher high that cleared this previous lower high, higher high, higher low, higher high, higher low. What is this? This is simply showing me this is a retracement of bullish market structure to come into a supply zone. And then once we hit that supply zone, sellers once again take control. Therefore, I can see that exactly by when I come into the 1-hour time frame, you'll see a bit more clearly. I've marked out my relevant lower time frame structural points, but we can see bullish structure, higher high, higher low, higher high, higher low, higher high into my supply zone, mitigation of my FU candle, boom. Price comes lower, giving me a break of structure of my previous demand zone, previous area that led to my high. We've now had a break of structure over here. Price then does a retracement, gives me my internal order flow over here, and then gives me another BOS. Gives me a break of structure to form a lower low relative to this, and also to take out a previous demand zone, which was a higher low. So therefore, we can see we've had a 2-level break of structure derived from my FU candle. This is showing me price action has shifted. We have now had a change in character, and now the bearish composite operator is now once again in control. Previously, it was not as part of the complex pullback because we had that bullish internal structure as part of that retracement. That bullish structure has now completed, reached the supply zone, and now has reversed and given me bearish market structure. So I know that the sensible thing to be doing and why this is a prime setup is because we are in a multi-time frame fashion on a higher time frame, on a daily, on a 4-hour time frame, and on a 1-hour time frame. They are all aligning to be bearish. Now all I need to do simply is find my supply zone to be selling from next. But I know that I'm with trend on higher time frame to lower time frame, and therefore I'm trading in a sensible way. All I have to do now is identify where to be looking to sell from. And that's pretty simple. So once we have had our impulse, as I've been saying this whole video, and as I say every time, identify a push. Identify this push over here. Why is this a relevant push? Because these sellers These sellers over here are responsible for making this low in the market and taking out my previous demand zone, my previous high low, to form a new low. And this is now aligned from a supply zone. This is showing me that I am trading with where the institutional injection of volume has come in. So this is actually a very strong push to be looking at, and therefore this supply zone becomes a very nice point of interest. Let's jump down to the 30-minute time frame to refine this supply zone a little bit better. Now, once again, I can't share exactly how I refine the zone, where I'm going to be looking, but briefly speaking, we know that somewhere in here, for the YouTube sake, somewhere within here, I know that sellers are present, and therefore I can refine that further, but I don't need to in this instance. Ordinarily I would, but I won't show you guys exactly how to do that in today's video. But when I come into the 15-minute time frame, all I need to understand is that, and just so you guys can have a bit of a clue, we have this push over here that formed this low. It took out this internal price action. So this is my immediate push. And then we have this spike up. What is that spike telling us? What is the intention behind that spike? Therefore, you need to understand that spike. And I'm sure for those of you who have been trading for some time, or definitely those of you from the WWA community, you know exactly why this spike happened, exactly the reasoning in terms of liquidity and target. And then we see that once this spike has happened, a very aggressive wick, and then price shoots lower to give us a new low relative to this area and ultimately to trend lower. So we know that our supply zone is somewhere within here. Obviously, within the community, we always refine that down to M1, M5 to be very precise within our points of interest. For today's video, I won't be covering that, but when we come into it, that's going to help you understand why this spike or this push over here, why we are not selling from that push. Because technically, we have reached our supply zone with this push, but we're not interested in that point of interest. We have to wait for price to come higher, and we need to know why we're waiting for price to come higher. So we are not just guessing and taking losses along the way. Regardless, when price does come into our point of interest, what do we see? We see very nice confluences. So once again, bullish price action coming into it, naturally as part of a retracement. We have bullish internal price action coming into my supply zone as previously. So I'm just doing what I did above, doing it rinse and repeat once again. That's the whole idea behind a prime setup. It's supposed to be bread and butter. It's supposed to be repeatable. It's supposed to be highly probable with high confluences and with a lot of potential. And this certainly does have potential because on every time frame now, especially in the lower time frame, which I'm about to show you, everything is bearish. Wouldn't it be so amazing if we could take trades that are daily bearish, 4-hour bearish, 1-hour bearish, 15-minute bearish, M1, M5 bearish. If we can have all of these lining up, we know exactly where our supply zone is and exactly where our target is. That's how you are able to get high risk reward trades, and because you just simply refine the zone down. Now, within my supply zone, which I've marked out over here, remember the zone that led to the low and that took out multiple levels of structure. We know that inside this zone, if we monitor the lower time frames, we can get a nice entry for a sell. Leading into it, something we teach within the community is a momentum trend line. I won't cover that in today's video, but from a very rudimentary level, we see equal highs over here. That is showing me liquidity. We have a play on liquidity with the FU candle. That FU candle gives me the rejection confirmations I need. I won't go into detail, but momentum trend line confirmations, structure confirmations, time and session confirmations, and internally on the M1, certain refined IFCs that we utilize within the community to give my exact entry and stop loss and those internal confirmations. But for today's video, all I want you guys to focus on is this. Equal highs. This is a rinse and repeat thing that you'll see time and time again. So definitely, I encourage you to backtest this, find points of interest and see how price action presents and the nature of price action within those supply zones, and you'll start to notice its tendencies and what price does again and again. Over here, we see plays on liquidity to show me that character shift. Why do we want to see plays on liquidity? Think about it. Because right now we are in a supply zone, but we are coming in bullish. Therefore, if now trend is supposed to change to bearish in that supply zone, we want to get those buyers out of the market and we want to shake out weak-handed sellers. Therefore, how can we take out buyers and shake out weak-handed sellers? It is to have plays on liquidity, and that's exactly what an FU candle is. And we can see that FU candle was successful by seeing the push and seeing the reaction. Once again, I've identified a push. That push led to a change in character because we did have a break of structure relative to this point over here previously where we saw equal high, high, low. So this is a decisional. This decisional led to a new high. Therefore, I know that when price shoots down over here, we have taken out my decision over here that is showing me bearish intent. and from a structural point of view, it also aligns on the M1 time frame. So I know that I see my rejection on my high time frame zone with a lower time frame confirmation, and then I just utilize my refined IFC on the M1 time frame to get my entry. I won't cover that today, but there was two options. My conservative option is the one I took today. What is the one I took with this trade, which led to a 4 pip stop loss. If I am to take an aggressive stop loss, this is more evident on M1. Just following internal order flow for the community, for the students watching this video. Backtest this and you'll be able to see exactly on M1 why the aggressive stop loss is over here. But that is a 2.5 pip stop loss. I'm still very much happy with a 4 pip stop loss, which is why I have my stop loss at the high over here relative to my FU candle. Therefore, I get tapped in at this price point over here. And now when I zoom out, that's my entry and stop loss. All the way down to M1 is actually what I did. But now I can start to see, because I've had that change in character with that push and I've taken out my decision on demand, and now I've seen a bearish rejection in a bearish zone. Why is it a bearish zone? Because this zone over here led to my low. My low being all the way down here. Therefore, I know that the target of my trade is to come all the way down to here to make a new low. And when I zoom out once again, that's only target one, because that is going to be just simply looking for a new push, like so. But now because I know I have reacted off a higher time frame supply zone, I can actually replicate that push. So what do I mean by that? I mean that this push that happened over here, that led to this low, we know that this push over here is a bearish leg, and I know that this is my supply zone responsible. So if I take out this demand zone over here, this is actually a very nice demand zone. Why? Because we had a reaccumulation in the zone. This is actually a reaccumulation zone, and this is my shakeout that led to my new high. Therefore, if price comes over here and respects it, then I can see price can potentially come back to the extreme levels of my supply zone. But if this is actually where the bearish shift is happening, again, my job is not to forecast and speculate and hope for the best. I'm actually going to be monitoring my trade and seeing how price action reacts and presents in each one of these zones. But assuming this now has been a reversal and this demand zone is now going to be taken out, I know that my target is actually to form a new low relative to this. Therefore, my sells not only have the potential to come to my shakeout over here, but my next target is to come and form a new low, because that is ultimately my 4-hour and 1-hour trend. Therefore, we can see that we are not even 20% of my ultimate target, but I'm not going to be holding full volume. Speculating is going to do that. You never just hold full volume. You see how price reacts in relevant reversal zones and take partials accordingly. But the key being you monitor and do what is probable. And again, your job is not to make 100% in one trade, because that is good for one trade. But what about all the opportunities that maybe come back to break even? Therefore, trade management is actually so important to actually maximize things going on in your portfolio. Anyway, not for today's video. I just want to show you that how you can ladder in and layer in confluences from higher time frame down to lower time frame. This trade alone, although already it is a 1 to 45 risk to reward. Let me just zoom in and show you guys. A 1 to 45 risk to reward trade at current price action. I know my next target is over here, because this is a demand zone that led to this high. I do speculate and forecast this to be taken out. However, I will be monitoring. Next point of interest is over here. I do speculate this will be taken out as well. Why? Because that is simply part of a bearish internal structure where I have impulse, retracement, confirmation in my supply zone, looking for a new impulse. So I am actually very confident that this should come and form a new low relative to my internal structure. But ultimately, I'm looking to see that whole trend play out, which is bearish from H1, H4 to daily. I do anticipate each one of those markers to be hit off. The only thing that I need to be monitoring and watching is that when price arrives in my shakeout of my reaccumulation, when price arrives over here, I want to be seeing how is that going to be reacting. So let's actually mark it up, and maybe something we can come back to at a future date. Okay, so this is something I'll be monitoring when price arrives here. Remember, at this point, I will be up around 1 to 90, 1 to 100 risk reward. So naturally, a place where I'm going to be looking to take a lot of partials off the table, especially because it is a demand zone. But I'll be monitoring within there, first of all, to take a hedge, to be buying, because I know that price doesn't have to actually melt from here. We know that price can certainly come higher, because we have all of these areas left unmitigated. So right now, we have no confirmation that my daily and 4-hour trend will present from this reaction over here. However, we know our immediate targets, and we know our buy zones to be hedging, and therefore we also know that if we are buying, where we'll be selling from next if it does come higher. If price doesn't come higher, if price doesn't respect my demand zones, I know exactly where I'm headed, and that is with my higher time frame trend. So this over here, very nice setup, definitely a prime setup with high risk reward, lower time frame confirmations being pretty much textbook as we teach them, with place and liquidity, momentum, trend line and structure, and session times. A lot of things that we look for, all lining up beautifully on the lower time frames within the higher time frame supply zone, with already a 1 to 45 risk reward, with potential being much higher. Also, how we manage the trade obviously is very important, where we're going to be looking to hedge, where we're going to be looking to sell, where we're going to be looking to buy, where our ultimate targets are. And obviously, as the weeks progress, that's exactly what I'm going to be doing, and I'm going to be managing accordingly. Yeah, nice video. I hope you guys enjoyed that one. Definitely a nice trade. That's something I would take 10 times out of 10, because I have all of the confirmations I need. It is highly probable zone, it is a favorable zone, and also I know the potential is definitely there. So guys, thank you very much for your attention in this video. I do hope you took some value from it. And yeah, I'll catch you guys in the next one. Take care.